Okay, well, the Sun Pharma numbers are out and it looks like it's definitely a beat on all parameters. So just take you through the numbers. There is a revenue growth of around 11% which the company has reported on a year-on-year basis to around 11,941 odd crores. The street was anticipating a 7% growth. So they've beaten with a double-digit growth on the revenue. We have EBITDA, which has actually been the big beat which has come in for Sun Pharma. So it's come in at 3,331 odd crores versus our expectations of 2,891 odd crores. So it's a growth of around 16 odd percent. Again, double digits there. Margins have come in better than expectations. So 28 odd percent in terms of margins versus estimates of around 24.8%, and a profit which has been flat. And that is because of an exceptional loss of over 300 odd crores on a year-on-year basis. So that exceptional loss has really pulled out the bottom line. But nonetheless, that it would have definitely been a beat in terms of the profitability as well. Just want to point out that we're waiting for the internals of Sun Pharma to be reported. But what is important to point out is that the likelihood of this beat is probably from two factors. One is the US markets. That is because they did sell Revlimid generic, the cancer drug, in the US markets, as well as the specialty business. They have drugs such as Ilumya, which is for psoriasis. They have Winlevi, which is for acne. They have Sequoia, which is basically an eye drug. All of these drugs have been performing extremely well for Sun Pharma in terms of the specialty business, and that is likely to be the other leg of growth, which has really pushed them in terms of the numbers and the performance that we've seen. We will wait for the details, but do remember that these numbers come at a time where Sun Pharma is wading through issues when it comes to an import alert at the Halol facility as well. And they do have a consent decree at the Mohali plant. So in context or in the background of that, along with Taro's poor performance, they've really beaten expectations. We have Unnati Jadhav, who's a research analyst at Sharekhan by BNP Paribas, who's joining in. Unnati, hi, welcome to the show. Your first thoughts on Sun Pharma, better than expectations?
Yeah, it's been quite a beat on the adjusted PAT basis because it has come at 10% above our expectations of 2,140 crores. So the exceptional losses that are there of 323 crores actually include impairment losses and so on, which can be added back to the PAT, and as such it's a cash PAT of 2,345 crores, which is a 10% beat.
Okay. Unnati, according to you, we're waiting for the details with regards to Sun Pharma in terms of, the geographies, etc. But based on what they've reported, what do you think led to this beat?
We believe that the specialty segment revenue or the global specialty revenue must have definitely added to the beat because for the last few quarters that we've observed, as this particular segment is growing at 25 to 30% kind of a year-on-year growth, it is leading to gross margins improving. So definitely it's a key driver for their gross profitability to improve. So we believe it could be because of that largely, which is led by the products like, as you said, the Winlevi, Sequoia and Ilumya across the world as well as in the US market. And then they had launched the recent products like Jadhav. There they had gained the market share. And they've also launched Revlimid, but we've yet to get a clarity around it, whether they've gained the market share in it or not.
Okay, all right. So that's probably going to be the two key drivers for Sun Pharma in terms of numbers. But the bar is set quite high for Sun Pharma now, Unnati. So what is your expectation in terms of a margin range going forward? Are we going to assume that Sun Pharma is probably going to report above 25%, even 27, 28% margins? Just before that, we do have the US sales which have been reported for Sun Pharma, and that is definitely better than expectations. So that's basically what we were indicating, that the US markets would be the key driver for them. $471 million is what they've reported, which is better than $430 million in the previous quarter and better than the upper estimates of $465 million that we had penciled in for this quarter itself. So it's definitely a beat which is led by the US sales. As you can see on your screen, $471 million is what they have reported. So Unnati, just a quick question with regards to the US business. $471 million includes Revlimid generic, it includes the specialty business. But what can we assume as a base case for Sun Pharma going forward? One, in terms of margins, and two, in terms of US sales.
See, I believe this 28% kind of a margin that they have been able to generate in the first quarter can be the base with which one can work for the fiscal year 24. Because there will be certain constraints also in terms of their R&D expenses likely to increase with 4 to 5 novel drugs being in the pipeline. At the same time, they'll be increasing their expenses on the promotional expenses. And their field force expansions happened in India. So all these factors put together will have some constraining factor. But nevertheless, this strong continued growth in the US will help the operating profitability to remain around the 20-30% kind of level.
Okay, all right, Unnati, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Sun Pharma. Stock is up around 2.2%. Was going in strong into its numbers in any case. And the company has indicated that they are confident of meeting the FY24 guidance that they had provided as well. We need to wrap up on this show, but closing bell up next. Stay tuned.